if you go back in time, Apple would rank a lot higher in terms of the priority of the conversation.
What's the elephant in the room?
AI.
It's AI. The reality is cooks on a park bench eating an apple, drinking lemonade, while the AI revolution is passing by. You cannot have the biggest tech trend in the last 40, 50 years pass you by. And I think for Tim Cook's legacy, its defining chapter.
Welcome to You're in Business. I'm thrilled to say that we're joined by Dan Ives. He's the Managing Director and Global Head of Technology at Wedbush. Dan has been a tech analyst on Wall Street for over 2 decades. Dan, thanks for making it to the program. How would you describe the market narrative right now?
AI, right? To some extent, first of all, it's great to be here. But we're in a fourth industrial revolution being led by tech and the AI revolution. And I think that continues to be the narrative. It's either you're in it or you're on the outside and you're not. And that's really, I think, what we're going to continue to see in this market.
I mean, markets have added about, $10 trillion in value this year, and that's despite all sorts of headwinds. Does that tell you that we're in this true AI supercycle, or is this just a melt up before correction?
Look, someone like myself covered tech 25 years, going back to dot-com bubble burst. This is the biggest tech trend in our lifetime. And I think we're only in the early days of it playing out. It's my view that's why we're going to have another 2-3 year tech bull market in front of us. And that's why every time there's geopolitical, Fed, Iran, or whatever, we just view it as you just buy more tech, right? I think that continues to be our view. There's more growth ahead of us over the next 2-3 years as a globe than the last 10 years combined.
But then you've got some who point at indicators like the Buffett indicator, right? Market cap to GDP, that hit a new all-time high, so even higher than 2021, 2024, and the dot-com bubble as well. Is that alarming to you at all, or are you taking this in stride and saying, you know what, AI is the exception to that?
No, look, I get it. And I understand, I hear it all the time, but it's just my view, if you focus just on valuation, you've missed every transformational tech stock the last 20 years. And I think as much as you can look at some of those metrics, it's not factoring in the growth. Right now, demand to supply for Nvidia chips, still 10-1. And I think it shows it's the multiplier, because it's not just about Nvidia and Microsoft. It's about the second, third, fourth derivative spreading across the rest of tech. That continues to be our focus. And if you go back dot-com bubble, I view this much more as a 1995, 1996 moment than a 1999, 2000 bubble moment.
What caught my attention as well is a post from Wei Lei from BlackRock, and she wrote that this is not your typical cycle. Think about loosening inflation anchor, loosening fiscal anchor, and a loosening growth anchor. We are in a super cycle of mega forces such as AI and the low carbon transition. It goes beyond the cyclical ebbs and flows, and the latest case in point are the hyperscalers. They are again raising CapEx targets. So I'm guessing you're fully on board with that view.
I think you want to see them spend more. And I think it's an arms race that's going on, and not just between US and China, but between big tech. You want to see them continue to spend. Because as we focus on the enterprise, consumer, autonomous, we get the physical AI, robotics. That's kind of the holy grail.
But are some of these numbers even attainable, sustainable? $200 billion in targeted CapEx by the hyperscalers? Those numbers are I just can't get my head around it.
Look, and if you think about $325 billion in CapEx this year for big tech, will that start to come down over the coming years? Of course. But think about it, you only have 3-4% enterprise in the US that have gone down the AI path. Europe, 0. Asia ex-China, 0. Middle East, just starting. The point is that to me is where it's all heading. When you think about sovereigns and everyone else, it's just the beginning. And that's why I just continue to view this. Like, we're going to be talking about NASDAQ 25,000, NASDAQ 30,000 over the coming years.
So where's the NASDAQ going to be by the end of 2025 going into 2026?
I think 22.5, 23,000, that's sort of our view.
What's been the biggest surprise for you in the earnings season when you look at some of the big tech names?
I think biggest surprise is just the derivatives. Like if you look cybersecurity, software, other parts of semis, that's all starting to now spread out. Big tech, and we expect it to be strong, it remains pretty robust. But I think it's really about the second, third, fourth derivatives playing out across the rest of tech. I think that is, in terms of like an upside surprise, that's what continues to be front and center.
I was looking at a note from Jason Pride from Glenmead, and he says that earnings growth results have been flat or slowing for the past few quarters, and they're expecting to slow further. The thing is, investors have often punished Mag 7 stocks for earnings results that were great rather than astounding. And so any deviation from the growth path, however minimal it is, would be of serious concern for investors. I can see you're sort of shaking your head there. Tell me more.
Look, because I think it depends. Like if you focus on earnings growth, okay, fine. But like right now, like investors, less focused on earnings growth. It's more like monetization, AI growth, hyperscale. Look what's happened with Meta in terms on the consumer side. Because we're just starting to see the next phase of monetization of AI play out. So yeah, like, look, you could have some like knee-jerk reactions, when it comes to, when it comes to earnings. But I just view it as like, it's forest for the trees. I mean, that's how we've always sort of invest, like the last 25 years in covering tech. It's like you use knee-jerk reactions, geopolitical, Fed. Like those are the ones, like you use those as opportunities, right? I mean, I remember like when the Iran bunker bomb thing happened, then next morning we put out a note being like, you buy tech. Tech's going to be strong. Now, at first, the initial reaction there is like, wow, oil, Middle East, this could. I view it as like the black swan event's done. Middle East now comes to the table when it comes to AI. Tech's going high. So that's our view. That's always been our view, right? Like over the decades.
I mean, for everybody watching, don't miss a bit later in the show. We're going to talk to Dan about Bitcoin and some of the other biggest investment opportunities right now. So make sure you watch all the way to the end. Dan, I want to sort of walk with you through Nvidia, right? Figure of speech. At the moment, this seems to be unstoppable, and investors around the world have to consider whether the high price tag that we have today is worth it for them to put additional money to work in this stock. What would you tell them about this today?
It's still a cheat.
I
think this is still cheap. Because there's one chip in the world fueling the AI revolution. And it's Nvidia. It's the web-by godfather of AI, it's Nvidia. And so I view it as like 5-6 trillion. That's where we're heading.
5 trillion by when and 6 trillion by when?
5 trillion by 26. That's kind of been our call. And like, our view is like street's still massively underestimating growth.
And that's even after being up over 200% in 18 months and forward PE of over 45 times. That's quite something. How about the China angle in this, right? Because Nvidia is not permitted to sell its most advanced chips to China. Is that going to get lifted? And could that change the pricing dynamic here?
Yeah, I think that's all part of trade negotiations. You've already seen a huge move, in terms of the restrictions on the H20. But look, it's a big chip on the poker table. In terms of those NVIDIA, that's what China wants. So I think more and more they are going to have the opportunity to sell into China. Because they're not going to give Huawei on a silver platter that business.
The Treasury Secretary Scott Bessent a few moments ago said that it may take more tariffs to get China to change. Do you think that's going to reignite the Trump tariff sensitivity that, at least for a moment, seemed to have begun to fade?
I think it's all just part of negotiation. It's the reality of like gamesmanship as this all plays out. Now look, like China is not an easy negotiator. So clearly it could take some tariffs, more to get them to the table. But it does feel like we're starting to get to a better spot between US and China.
And so you expect a breakthrough in the China-US negotiations? Like a grand deal? Because we got that between the US and the EU. We got it between Japan and the US. So maybe, just maybe, we could get a big deal between China and the US. I mean, we've seen it before under the first Trump administration.
Yeah, I don't think we get like the grand deal right away, but I think you chip away at what's going to be a bigger deal between US and China. Look, and a lot of it comes down to like US needs China, China needs US. And regardless of like, does it take them time to recognize that? I think that's also why you've seen Trump administration back off further from some of the tariffs.
What about the plans of Saudi Arabia and the United Arab Emirates to become AI data center hubs? Those are helping some of the big tech names unlock new sources of revenue. The Public Investment Fund in Saudi Arabia has been instrumental in that, and they've set up a new company called Humane, which is taking up all these new bits of hardware. Have you heard anything else on potentially even more deals and more sort of chips heading towards the Gulf?
Yeah, I mean, we speak to investors in the Middle East all the time, and it's just beginning. Like the AI revolution is now coming to the Middle East. And I think what you're seeing in Saudi and UAE, it's just a start, because from a data center perspective, the amount of innovation, the startups, the sovereigns, like, look, and with that's just more bullish for US big tech, for Palantir, for Nvidia, for Microsoft, and so on.
So we're going to see you visit the region more often?
We will be visiting the region more often. And see, part of it, it's my broader view in like Middle East, right? Is like this region doesn't want to look at the AI revolution from the outside looking in. They want to dive deep in. And I think this is the start of like, I think massive innovation that you're going to see in Middle East around AI. And I think you see more and more. I see so many startups leaving Europe, going Middle East, Asia, Europe. They're leaving Europe and they're going to US, or they're going Middle East, or because it speaks to like, I think there's an opportunity for the Middle East to kind of be like number 3, US, China, and then I think some of the mantle that you're seeing with Saudi.
So with that being said, then what could be a potential stumbling block for NVIDIA? I've heard a lot of the positive underpinnings of your bullish case for the stock. But like, what could be a pain point? Where's the vulnerability? Is it power? Is it access to raw materials? What is it?
I think you nailed it. I think it's the supply. Demand's not the issue. It's supply. Power, chip driven. You talk about US, China, like it's important that you don't have any like silver bullet, in terms of those deal negotiations negative. I mean, those are the biggest risks. They look like AMD is going to benefit, TSMC, Broadcom. I remember like many are going to benefit within chips. But in terms of our view of like the Godfather, Jensen, years ahead.
To everybody watching this video, we would love to hear from you. Drop a comment below and also take a moment to hit the like button. I really appreciate it. Dan, we've discussed NVIDIA as a symbol of AI. I want to broaden it out to Tesla. Earlier, you suggested some changes to Tesla, which would see Elon Musk's level of voting power increased, but would come with these guardrails. And he responded by telling you, "Oh, shut up, Dan." Has anything changed since?
I mean, you haven't heard Musk talk about third party since. You've seen a very wartime CEO Musk since. I'm not saying it's just because of what I said, but the point is like, look, I'm like the biggest supporter of Tesla and Musk, known him for decades. The reason I say that is because I care so much about the story. And I believe Tesla, along with Nvidia, are the two best physical AI players in the world. But politics, it's a lose-lose situation. And from a board perspective, the biggest asset for Tesla is Musk.
And so now that Elon Musk has formalized his political ambitions and created this political entity, a new political party, is Tesla in even more trouble? I mean, you're saying that Nvidia and Tesla are your two favorite plays in sort of AI, but I guess that would just leave Nvidia, because Tesla, with Elon Musk, has made a decision to continue to prioritize politics, right? Doesn't sound to
they
me.
They haven't filed the third party. I mean, I do think the third party is going to kind of wane, like in terms of that view. Like Musk, you got to understand, like, you know, he could say certain things, but I do think politics is going to take more of a backseat. I mean, look, it's my view, like autonomous and robotics, Tesla is going to own that market. And it's just so important for them to head down that path. Look, I get the brand issues and Musk, Trump, Doge, some of the politics. It's just my view that like that's going to become less of an issue rather than more of an issue going forward.
Have you had any assurances from Tesla on that front, or would you say that's slightly speculative from your end in terms of focusing on Tesla and less on politics?
It's my view, but I know, I mean, Musk has been, what he's done the last month, that's the Musk that we know. Factory floor, driving autonomous, driving robotaxi, driving Optimus. I think you're seeing what we would define as like a wartime CEO with Musk.
So what's your price target for Tesla?
500. And look, and I think that's conservative. I mean, as they're successful in autonomous and robotics, I believe ultimately you're looking what could be a $2 trillion market cap.
Which company, Dandy, within big tech has the best relationship with the Trump administration? Because when I look at Elon Musk, I obviously see the roller coaster ride of a relationship he's had with the US president. If you had to make a guess, which company is in a solid position with the White House?
You'd have to say Jensen and Nvidia. Like that's call him like first buddy or whatever. I mean, he's the one, and Nvidia is probably in the best position. Hey, look, and part of that too is because White House needs Nvidia. I mean, there's one chip in the world fueling the AI revolution. So I think now, look, that's ebbed and flowed, right? Tim Cook for a while, but I think right now it's definitely Nvidia.
I was looking at some of the statistics for Alphabet, and just trying to understand how people are changing their behavior when it comes to search, right? And I think we can all admit that now a lot of us go to ChatGPT first before we go to the search engine that is Google. Google's saying that ChatGPT had nearly 5 times as many daily users than Google's own website. And the question becomes, how shaken is Google's business model, and how big a threat is ChatGPT in this space?
Look, it's a threat, but I view it also more as an opportunity for Google. Like I think, first of all, the demise of search, I think it's greatly overdone. Like again, I'm not saying it is a threat, but look at like the numbers from Google on his last call and a lot of the work that we've done. But I believe like they're going to be able to monetize when it comes to AI, like in terms of the next phase. So I don't view them as like outside looking in. I do view AI is going to be a huge theme that they're going to be able to monetize.
What about agentic AI? So ChatGPT agent, I was messing around a little bit with it. I have to say it's been underwhelming. far from the wow factor that sort of the other iterations of ChatGPT have brought with them. I don't know if you had a chance to try it out yet. There's hopefully still much more to come on this, but it's the agentic component that would be even more of a threat to Google's position in search.
But also Google's going to play a role there too, right? Like, in other words, like they're not just going to stand by. So, look, this is all, it's going to be like a decade-long build-out. And we're basically 3 years in. That's the best way to think about where this is all heading.
When you look at some of the other names and software specifically that have done exceptionally well, you've got Palantir, and then you have others that have kind of lagged, like Snowflake, for example. Where should I focus my attention most? I mean, beyond Nvidia and Tesla, if I wanted to make more bets for the next 1-2 years.
Yeah, and we talk about in our Ives AI 30, right? Like in terms of like chips, software, cybersecurity, Palo Alto just acquiring CyberArk, which is in there in terms of CyberArk. Look, I think it's like the hyperscalers, Microsoft, Alphabet, Amazon, Oracle, IBM. Palantir obviously has been one of our favorites, and that's $1 trillion market cap next 2-3 years. And then it's going to be like Mongo, Snowflake, Elastic, like Salesforce, which has been a laggard, Adobe. Like, I think you're going to see like a lot of the consumption models that are going to be very successful.
You mentioned the AI-focused Revolution ETF that you've created, and it's pulled in, from the last statistic I've seen, is it almost $500 million?
Yeah, we're about 422 in 7 weeks.
Yeah, less than 2 months. You've got 30 stocks in there. Could you tell our global audience more about the criteria there and how frequently you're willing to make adjustments? I mean, how active is this ETF?
Yeah. And the Ives ETF, it's all based on our research in terms of the Ives AI 30. Look, the whole goal here is like so many investors, institutional, retail, people I bump into airports, wherever, they're like, how do you invest in AI? And obviously like, it was always like Nvidia, Microsoft, Mag 7. But my view is the reason it's created, it's about second, third, fourth derivatives. We're talking about trillions that's going to be spent over the next few years. So the AI 30, it's really broken down like semis, software, cybersecurity, the consumer piece, obviously Meta and others, autonomous, nuclear in terms of fuel, like names like Aqua. But we change it every quarter. Look, because there might be names today, they're not as front and center, but then in the next 3 months, 6 months, they get on the radar. So it was the whole goal to put together an ETF based on the research that encompasses all the derivative themes. Palo Alto acquires CyberArk, okay? CyberArk, which has been a massive winner, CyberArk being on there. The goal is like CyberArk, cyber, but that's giving Palo huge AI capabilities. See, I'm just trying to like explain, like that's my vision. That's why we wanted to do this.
What I've also noticed is that we haven't talked about Apple much, and we're already, almost 30 minutes into the program. And that's almost shocking because if you go back in time, Apple would rank a lot higher in terms of the priority of the conversation. What are we going to get this time around from Apple in, September, October? And do you think that we're in for another upgrade cycle? I mean, I'm probably going to upgrade this time around. I skipped last year, and I'm looking forward to the thin version because it's not going to drag down the pants and the suit as much, right? When you're carrying the phone. But that's just me. That's anecdotal. What are you seeing from the actual data and your numbers?
The tale of two cities of Apple, right? Like, it's obviously been one of our favorites for decades. Okay, on one hand, it's like iPhone demand, China, rebound, upgrade iPhone 17 going into next year, where it's going to be the new form factors. But what's the elephant in the room?
AI.
It's AI.
Yeah.
Like, the reality is like, Cook's on a park bench, eating an apple, drinking lemonade, while the AI revolution is passing by. So it speaks to my view, and we've talked about it. This is a moment of truth time for Apple. because look, it's not coming internally. Like internally, they're not developing some magic formula from an AI perspective. They got to do a deal. Now, I know historically, they haven't done acquisitions. Biggest they've done is Beats, $3 billion. I think Perplexity. I don't care if they spend 35, 40 billion. Like, look, you cannot have the biggest tech trend in the last 40, 50 years pass you by. And I think, like, look, for Tim Cook's legacy, it's defining chapter.
And you think we're going to get a decision on this by the end of this year? I mean, they're running out of time, effectively.
Well, that's our whole point. Like, our whole point is, like, time's not infinite. You know, and like, I was at WWDC, like I always am. Like, this last WWDC, it felt like Back to the Future. Back to, like, 2016, right? Like, in other words, this is very important. Because, look, you do an acquisition, they get this right, given the install base, it could add $75 to $100 a share. Now it's time. That's why we're not talking about Apple. You know, you could be like Tesla, have issues in Musk. They're going for it. Alphabet, going for it. Meta, wartime CEO. Microsoft, Nvidia. The point is, like, this is the time.
And so you're not seeing that energy and conviction at the top, in the top ranks of Apple towards
It's definitely concerning. Like, it's concerning when you have the best install base in the world, biggest. But you have to monetize when it comes to consumer AI revolution will come through Apple. 2.4 billion devices, 1.5 billion iPhones. You cannot just wait.
What do you feel the holdup has been?
It's the culture, it's the DNA. We could do it better than them. They had a black eye from a year ago, introducing things, and 90% of that never happened. They had to backtrack. But listen, like, this is the time. They need to do something.
I want to get back to the broader market, Dan, because investors are clearly not worried yet about the ongoing political pressure campaign from the White House against the Fed. What would be a red line for you to ring the alarm bells?
Just anything with Powell, right? I mean, it's like the overtures will be there. Hopefully you get cuts in the fall, probably 1 to 2. But Powell's not going to cave to political pressure. Tariffs are still X variable relative to uncertainty. But Trump's not firing Powell. So it's going to be this, you know, kind of good cop, bad cop. You know, and obviously, look, I mean, the Powell construction. I mean, you have to admit,
you've never seen anything like it in sort of the history of the Fed. You know, the president with the chair of the Fed with hard hats and, construction sites and, pat on the back, cut interest rates. You know, that's a new one. I mean, it's
Trump. It's 2025. Anything could happen.
Speaking of anything, then Bitcoin close to all-time highs. It's quite closely correlated. Right? I mean, quite closely correlated to the broader AI play, isn't it? I mean, there was a sense that it could serve as a diversifier, but the reality is that when AI stocks and sort of big tech goes up, Bitcoin goes up. That's kind of how it's been. Do you have a price target in mind for Bitcoin? Given what we've seen on the executive and on the legislative front, are we going to sort of get into a new cycle with more gains?
Look, I think the path's higher, right? Like, it's our view, like, it's a deregulatory environment. So like, I think the path's
how much more can be juiced out of this investment for 2025 going into 2026? How much is left in that?
Okay, I don't know necessarily in the next 6 months, but like, if you look over the coming years, like, this price could look cheap relative to where Bitcoin can go.
And so where would you say Bitcoin could go?
We don't have like a target per
I know,
se.
Dan. I thought I'd try,
But my view is like, look, I mean, Tom Lee is obviously one of my great friends, and I view a lot of stuff that he talks about and Scaramucci and others. And, I think like I think like with Sal, I've known him forever. I think he's on the right path. I think you're going to see more companies going down that path, public companies like Sal and MicroStrategy.
I want to get to a bit of a personal segment. How do you invest on a personal level? What does your portfolio look like?
Just ETFs, right? I can't own individual stocks.
Are those your own ETF? Are you allowed to own your own ETF?
No.
Okay,
Can't
just
own my own
checking.
ETF. So it's just like, it's like I'm like, I'm very focused and like, look, I mean, I'm bullish on tech. I can own the Qs, but I can't own any of the individual names.
So who inspired you to get into equity market research?
I mean, it's just really growing up, like in high school, I was always drawn in terms of like stock picking, always loved the market. And I actually like started a career in like late 90s, right as the tech market was booming. And I was at a tech focused investment bank, and kind of like I always, had an affinity when it came to like revolutionary tech, changing things. And I think like from an investing perspective, ways to maybe see things that like others don't see at the time.
So what kind of tips would you give to anybody starting out on their investing journey today?
I mean, to me, it's just like, it's really information flow, right? Like, it's just like building your own investing philosophy, like your own sources, your own metrics, and I think, having influences, but sticking to your philosophy, and I think your paradigm, shifting when you have to. But I think that's my, like, because now there's so much information flow, right? Like, there's like, there's so many opportunities that you can just get smarter and smarter when it comes to investing.
You say that, but like sometimes, I mean, maybe it's good to just put it in an ETF and not try and outsmart the market because, there's...
But ETFs are a key part of investing. Like, it's not the same individual stocks. Like, I think ETFs are a core part of the future.
What's been the greatest struggle that you had to go through in your career? Any wild anecdote that you can share from your years on Wall Street?
I mean, just doing it 25 years, like .com bubble burst everywhere. I think it's just like you go through periods where like names go like so against you. No matter what happens, like stocks are not working. And obviously you could question confidence, whatever, but I think it's like, I always feel like my biggest successes, it's the failures that have helped those. So it's almost like learning from failures, learning from bad calls. That's been probably like my biggest opportunity set. And look, it's just like, over 3 million air miles the last 25 years. It's like able to see the world and so many investors, and it's enabled us to have like a very good perspective when it comes to investing.
And can I ask where the inspiration for the fashion comes from, or do you kind of just see what vibes? Because you're a celebrity on the tech research side, but you're also a bit of a celebrity in that you stand out with how you come on the shows. So I'm wondering, where do you get those ideas from? Because you keep coming up with stuff. I'm still in my white shirt variations. So.
I could help you with some shirts. Look, I always have dressed funky, going back to like when I was a kid, and like I love a lot of colors, and I've always, like, there's different designers that I find inspiration from. I find things that like through travels and different types of brands or cool things, and also like when I dress funky, it's kind of very similar like the way that I invest, when it comes to like the view of stocks, right? Like it's not conventional. And look, it's like everyone has different fashion sense, right? Like for me, this is like the one that's always like fit.
Dan, this is a fantastic note to wrap up.
Thank you so much.
Wrap up on, and thank you so much for your time and your insights. And I hope to see you visit the region rather than me coming out to New York later this year. Thanks again.
Thank you.
Thank you for listening to You're in Business. If you've enjoyed the conversation, like, share, and subscribe. See you next time.